Hi guys, we'll be talking about the Hyde today at Balmoral. Why are we talking about this? Because he has TOP recently, and there's quite a lot of interest around it now, and then units has been moving. So let's see whether this will be a good buy or whether it is suitable for your needs. Whether are you buying for lifestyle or are you buying more for investment? So let's have a quick look today. A disclaimer, whatever I share today is just based on my own point of view and my own research, so it doesn't represent anybody's. So make sure you do a due diligence. Okay, I've been to the Hyde. It's quite a nice development. Pretty much quite well done. After all, this is still pretty much a luxury development lah. So you can for those of you interested, you can have a look and then see the finishing, the quality of the development. But generally, like I said, it's a nice development overall. But whether it will make money, I think it doesn't mean that the development is nice. Then people will be paying big bucks for you to exit next time. So this is just a very what I call emotional factor, and that's not too important. For those of you who are not very clear about the Heights location, it is along Balmoral Road around here. So as you can see from this picture alone, there's a lot of supply in the area, a lot of residential units and developments around here because due to its popularity. But of course, with the high supply comes a little bit of issue lah. Next time when you want to exit, how unique is your development? So is it gonna have that kind of star factor for you to be able to exit comfortably? Let's take a look at the spec sheet over here. Let's see. The site area is about 67, almost 67,000 square feet. And then this location, and then you've got generally 117 units. And then unit mix is around here. You got more of towards the three beders lah. And then let's see. For supply, usually we look at the 1 km radius for as what I do for most of my other reviews. So I added them up. This took me quite a while, quite painful process, but I managed to add up to about 8,000 plus units. And I think this is quite a lot of units for a particular area. In fact, this is one of the highest that we've done for any reviews for the developments lah that I've done. This is one of the highest supply in the area. So this could be a key concern for you next time if you want to exit. Okay, so I pulled out a few that are rather similar to the Hyde in terms of characteristics. What kind of characteristics we'll talk about it again. If you want to know more, then you can just DM me and then we'll see. We share a little bit more whatnot here. So you can see for Juniper, this one is TOP almost the same year, and then unit is also about the same. I think the length is also the same. So when it comes to looking at the performance of nearby comparable condos, I tend to look at those that TOP, if possible, as far away from 2013 as possible, because that was the previous market peak, and then we will want to see how is their performance after the market peak, and then so I pull out something that is more comparable, that is more recent and similar characteristics in the form of these three condos. So let's see what's their performance. As you can see over here, the height is around here, went down somewhere towards the COVID period or nearer towards the COVID period, and then came back up to where we are today. Recently selling better because of the fact that the condo has already been done. So people are more, they are much more emotional buyers since they can see, touch, whatever the actual units that they want to see. So it's a little bit more emotional in that sense lah. And it's actually dangerous. I wouldn't like to look at units that are already done. Because sometimes you are a little bit blinded by the emotional factors, especially those with very good views, huh? Okay, and then you've got Juniper Hill, also pretty much the same pattern. And then we look at the three other older ones, not too old. In fact, they are less than 10 years old, and they're all now freehold. So lease is definitely not a problem. And we'll see. For Robin Residences, it has been on a going sideways, up a little bit in 2018, and then after that came down. I think if I'm not wrong, that was the previous peaked before the onboard fever, before the cooling measures came in July 2018. Okay, and then you've got Google Grand also. Not really much of increase in the price movement lah. And as for also State 2 also at going moving sideways. So as you can see, if I base this on the similar characteristics of the base this on similar developments on character on the in terms of characteristics wise, then I think this is not a very secure condo to enter for when it comes to investment point of view. And the same goes for Juniper Hill. I think this is pretty much since their characteristics is about the same. Therefore, I will predict, I will foresee, in fact, the future performance will be about the same as the Hyde lah for Juniper Hill, although it's just a little bit cheaper. So if you take a look at location wise, Juniper Hill is just not too far away. It's just behind here. Okay, of course, it's not as right beside rather not say major road, not as significant a road as the Balmoral, but then again, it's still rather not a very big condo itself. Okay, you can see the size are most about the same lah. So I will foresee pretty much they will be behaving about the same when it comes to price pattern wise next time. And then we take a look at the three guys just now that we mentioned. We've got Goodwood Grand, Robin, and also State 2. Goodwood Grand, you've got so far nobody who lost money, thankfully. But did they actually make money? Let's take a look. So we've got 5 transactions that are round trip. The rest we have met, I would say maybe most of them have not liquidated yet. And let's see, they bought at this price, so at this price, this is the unit area. So you've got your profit margin over here. And if you take a look, like what we mentioned before, as long as you're not making 6-figure and you're buying the discount of places, generally you're making money because first of all, you're losing quite a lot in terms of buyer's stamp duty, and you're not even factoring your agent fee that you're probably paying to sell, and also you have your interest maintenance fee property tax blah blah blah. So this guy definitely lost money. And then these two guys, if you look at the quantum, I think easily the quantum you are looking at probably a almost 2 mil plus from there, almost there lah. So just the buy strategy alone is not cheap. And then if you years of ownership, you got 7 years of ownership. If you are taking loan, then I think definitely this guy is in a deficit. Same goes for this guy with your even larger area. Therefore, I think I wouldn't say it will be a profitable development over the past few years. As for Robbie Residences, you've got one guy who lost money, and then you've got 3 guys who made money. And then we take a look, maybe this guy, because of the area that is much smaller, and his holding period is only 4 years. So probably he made some money, but he definitely didn't make 6 figures. Overall, he probably made only I would say maybe 20-30K. Not after all the everything involved, after all the fees and charges here and there. And then these two guys definitely lost money. So that's Robin Residences. You've got State 2 also. 10 guys who made money, 16 guys who lost money. So the win-lose rate for State 2 is even worse. And all these guys already lost money. So let's not take a look at them. And all these units are quite big, and that means their quantums are quite big. All these guys basically didn't make money. Other than this guy over here, his holding period is this guy holding period was only about less than 5 years, 4.5 years. So he might have made a little bit of money. But so if you take a look, that means a total of 26 transactions. You got 1 out of 26 who actually made some money. Okay, I think this is quite a not a very rational decision to jump in to jump in the area. And keep in mind, all these are within 1 km radius of the height. So I will expect price performance to be pretty much similar, since the characteristics of developments are pretty much similar also. And let's not even talk about, this one, the not near MRT, this kind of thing. I think we've touched on that a lot of times before already. And these are definitely not the main deciding factor of whether a development makes money. If you still think so, then I think it's either please spend some time to watch my other videos, or basically, if you want to insist and hope that you're making money, then please go ahead. Please be the ones that pay for our profits next time. Okay, either that, or if you want to play safe, then just stay on the market. Because if you are just buying based on these emotional needs, then I think definitely property investment is not suitable for you. So now the height we are looking at this kind of PSF is looking at all these one, two, three, 4 bedrooms. There you got average about, I would say, 3,000 plus PSF. That's why this guy is floating around here. And if you compare to your older neighbors, or pretty much your competitors, they are about, I think, definitely less than 10 years older, and they're all freehold, so lease decay is not a problem. And then the nearest competitor is Goodwood Grand. That means his profit margin, and not profit margin, the margin from the Hyde to Goodwood Grand is almost about 500 PSF difference. So will people be willing to pay that kind of difference, since there's no lease decay problem? Then that would be something for us to find out in the future. I think, although I would say past history doesn't seem very optimistic in that sense. I mean, I wouldn't really waste my own money in such a development. Okay. And that's why I think when it comes to conclusion wise, I feel the hype is definitely not something for you if you are looking to make money in terms of capital gain. But if you're just renting out, I think you just want to gain that little miserable rental income and then risk capital loss. Because when we are talking about capital loss in that area, you are not talking about maybe a few $100s, a few $1,000s. You're talking about this kind of money. So imagine you're collecting rental. How long will it take for you to offset all this capital loss? So are you actually would you actually make more money by just leaving your money in the bank? So even if the bank is gaining 0.05%, you may be net better off, because remember your rental income is subjected to taxes, and then you also interest, and then you've got your maintenance fee, you also got your property tax. I mean, the first tax is what? Income tax, because especially your tax bracket is higher. So how are you going to play around with it? So that is going to be quite a little bit of challenge for this. And when it comes to the ROI, especially not just monetary sense, you also got all the effort. You've got to coordinate this and that. You got to deal with all the drama from renting out the place. And then is this going to be worth all the trouble or not? That is something you may have to think about. So therefore, I think at least in Singapore, you definitely have to, if you want to make money from property, you definitely have to go down the capital gains route. Okay. And recently I've been seeing quite a lot of rather insane activities in terms of the buying in the market. Quite a lot of irrational buying. Nowadays I'm hearing quite a bit of um and maybe I just hear people talking about it, or I hear maybe even some distant friends hey, my friend recently bought a condo called what called the this and that one. So I'm thinking, wow, that's quite why will you buy that kind of condo? And then I will ask them what's their um um aim. They say, or just to investment, to rent out. And the fact that you want to rent out, it actually means that you just want to make money, man. And if you want to make money through just the rental route, then I think this is definitely not something that is very logical in terms of today's market. Because our market here is definitely not for the speculative sense. And that's why we've got a lot of cooling measures from the government. We are trying to cool the market. And let's be clear here. The government has really made it very clear that they do not want to kill our market. So why did they kill the market back in 2013? Is because it has been extremely ridiculous lah, I would say lah. From 2019 to 2013, we all know that how crazy the market has been for during that 4 year span after after the global financial crisis. And in order to stop people from having that sort of speculative market and then risking a lot of people's fortune, they had to throw in a lot of different measures. In fact, 10 plus cooling measures just to cool the market before TDS finally came in and killed the whole market. So yes, that time previously they did kill the market, but now with everything in place, we've got so many cooling measures in place, you realize that this is not their intention anymore. Their intention is just to make sure we cool our market and then make sure it's as stable as possible. They want a movement that is as stable as possible. So you can wait if you want to. But ultimately, if you have been observing the market for the past 2 to 3 years, you realize that okay, maybe today you got in here. You didn't get in here because if it's on a high, and then yes, you have some cooling measures here and there, but ultimately over 3 4 years, the movement would have been going up. So what happens when you finally decided to let go? Never mind, just put my money in because guess what? The stock market is down, crypto market is down, everything is so uncertain. So might as well put into something that's hard set. Because why? Because even the foreigners are coming in. They are coming in because of how stable our market is. Even if we do have a recession, I highly doubt that we are going to have a crash. We are probably just going to have a slight dip. I wouldn't even call it a dip. I would call it more maybe like a slight decline for a few quarters, maybe at most 1 year. And then as the economy slowly starts to recover, then we should have quite a bounce back, quite a recovery, since the fundamentals of our market is quite strong. Okay, after all, we've got a whole bunch of PGB upgraders, and then you also got a whole bunch of EC upgraders as well. And these guys are exiting with easily 300 to 500 plus $1,000 worth of profit. So these will form their down payment for exiting pool in the upcoming years. So if you are talking about cooling measures, as long as you have the holding power, even if um, I would say actually even if cooling measures come down tomorrow, I'm not too concerned because if you take a look at the past few quarters, you have yeah, or rather not say quarter, the past few years, you got the market just basically recovering within 2 to 3 quarters of any cooling measures. Because like I mentioned, this is what the government have been doing and not this. If this is the case, then previously it would have taken a few years to recover. But the fundamentals of our society doesn't seem that vulnerable anymore, given the many cooling measures, and that's why we also got a whole bunch of foreigners coming in right now. And if we do not pick the right ones to buy, and when the foreigners finally snap it up, what can we do as Singaporeans? I think it's just our favorite activity, just complain because you can just complain and complain, but nothing will happen um because you fail to do your own research, you fail to do your due diligence in time, and hence there's no point blaming anyone, right? Okay, so and please, if you really have no idea what you're doing, I would say please stay out of the market. Okay, and if you refuse to seek the right professional help, then like what I say also, please stay out of the market, because the more speculative you get in, the more likely all of us are going to get a cooling measures. So if you are the kind that's gonna be very irrational, whatever is upcoming new as long as it's new I will buy then I will say please do us all a favor and stay out of the market, because you are likely to gonna be the one that is gonna be um causing these cooling measures. Okay, then and we wouldn't want too much negative sentiment in this sense. All we want actually now is more of a stable increase, stable progress in our property prices. And I think that would be something that we will want to see, especially for those of us who are already invested. So yep. So unless you want to contribute to the optimism on the market to help boost our investment, so if not, then please stay out of the market. or at least go and seek some right professional help. So, okay, that'll be end of our session today. And if you feel you need some help in terms of looking for the right development to invest in, then please feel free to text me, DM me, or whichever it is. I'm sure you can. The fact that you can find my channel means that you would have been easily able to find ways to contact me. And that'll be all for today. And see you guys. Bye bye.